start off so.
Hello, everyone. Welcome back to the channel, Matt with Green Bar Trading. I'm making this video up in another room. My parents are in town for the week, so they are down where I'm usually making my videos. So I still wanted to come on here and, tell you guys something that I noticed with the overall market structure. Okay, this is something that is really important to kind of understand, and it has to do with the options market. Okay, so when a lot of people are bearish, when a lot of people think that the market is going to pull back, they will put on a lot of hedges. So they'll buy, puts on the overall market. They'll do, a vast array, a lot of other things, to basically hedge their long positions that they don't want to sell, because, if they sell, they may miss out on the next move higher. You have to pay capital gains. So a lot of hedge funds and firms and, fund managers, they just want to hedge these really big positions they have. So they'll buy protection. So that's why you see the market is very tough to bring down. So we saw it dropped 5% from its highs, and then we skyrocketed back up. It's really preventing the big crash, the big correction that people are calling for, is because traders, lots of options, hedges has been put on. Huge positions in the options market can really hold up a market. And we saw that a lot. Last year we saw a lot of call buying, and that made the market just go rocket. So the last few weeks, the options market saw a ton of hedging. So if you're hedged, there's no reason to sell your long positions. Well, when you don't panic, you get these, quick drops, but then the rebound. So that's market structure, the options market playing a big part in the overall market. So with that little thing put aside here, I'm going to go over a trade that I just took in the micro E-minis, which is the S&P futures. Before I do that, I'm going to introduce you to my oldest. Ella, you want to say hi?
Hello.
So, I'm doing a lot of things. I wear many hats. My wife just left for work. I'm here at the screen. We just alerted Discord with all the stuff. You guys already know that. I got to take care of the kids. I got my parents downstairs. They're staying, like I said. I got to make breakfast for the kids. I do a lot, but that's that. So let's get into sharing the trade and sharing the moneymaker. So what did I do here? Okay, so let's take a look. Let's dive into this little trade that we took. So I'm sitting here, I have CNBC on, basically just doing my normal morning routine on Discord. Like I said, I put in a lot of work already over there. You guys should go check that out. It's a great community. It's growing so fast. And, hold on one second. The wife is calling. I'll call you right back. Like I said, wearing many hats. So right here, I'm sitting here with my daughter, and I see this. The market, hang on one second. The market started to, pull back in the futures market. Let me just put this on here. So the only thing I have is VWAP. That's my indicator I use when I'm trading futures. So I see here, we're definitely extended, but I have a very bullish view of the market right now. The Fed, everything is just really, really nicely. We saw a great rebound. And from the London Open, we've gone up, okay? That is a very good sign. So when the market's going up, I'm very interested to go long. So when I saw the opportunity, when the futures pulled back dramatically, I mean, we're talking about 20 points in 3 minutes. I quickly signed on here, really quickly entered a position for my first long right around here. Now, when I do something like this, I'm looking to just get a starter position and then, see where it goes, because I'm expecting a bounce, right? So I get in, it goes down even more the next minute candle. I buy another contract. What this did was made my cost from 4407 right in the middle of that. So I split the cost. So that was around, 4404-ish, something like that. So I'm in at I love my position that I was in here. We got the bounce from VWAP. I sold into this beautiful push up, and that was the trade. Now I sold at 4408. I entered at 4407.25. That was my entrance. This is my exit. The reason why I profited this much is because I bought down here. So this was a nice, get in, wait for it, get in again, and then play the upside. Because like I said, my overall bias on this whole morning was, man, I want to get in long because I think the market's going to go up. So this brought people to get back in long that didn't want to buy here. Buying is exhausted here because it was already up so much. It gets sold off and then buying comes back in. Simple supply and demand. So that's it. Not going to be able to do much trading today, obviously. So I wanted to, make a nice trading video for you guys, give you some, market structure here. So 31.25, not bad for just, sitting here in the morning, having a cup of coffee, talking to my daughter, and, making some money while we do it and giving you guys some valuable information. So do you want to say goodbye?
Okay, goodbye.
Hit that thumbs up for the video. Take care, guys.